So as you just mentioned, last year when you guys were kind of getting inflation coming in around 2%, you had this benefit of the tailwind of fiscal stimulus. And you still have that to some extent, although the tax cuts have mostly feeded through. We've still got something in the pipeline from the spending cap increases. So I guess, how do you think about inflation as that fiscal benefit wanes toward the end of this year?
Yeah. Inflation, first of all, month to month, quarter to quarter, is going to move around. There'll always be factors hitting it. So probably the biggest single factor driving it is the rate of underlying inflation, or a closely related idea of where inflation expectations are anchored. The thought being that's where inflation will go in the long run if it's not being pushed by those other factors. So we also think that slack, that the level of slack in the economy does play some small role. It's it's actually still a measurable role. It's nothing like it was in the 1960s when the Phillips curve was quite steep. So that's also something that plays a role. So we take all those things into account, and the part of it that we can control is the slack part. And again, we do expect that this reading will be transient and inflation will move back up. And if it isn't, then and if it runs persistently below 2% for a sustained period, then that's something we take into account in setting policy.